Good morning, everybody, and welcome to the Vol Report from Option Pit. Aha! All right, everybody, and welcome to Option Pit, your home for volatility and options education. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, saying hello and good morning. Blog from yesterday. Actually, maybe one of the few places where we actually try to think about the blob, the blob. VXX looks ripe again. And lo and behold, today, what do we have going on? VXX weak again. Market rallying on more not great economic news, but good news for rates as the Treasury looks like it's trying to stabilize a little bit. We'll see how long all of this holds up. That's the big question. How long do all our little rallies, our bad news rallies, hold up? I did think something that was a little interesting from a news point of view as Great Britain is on track to start inching their rates back up, although China is trying to crank up some stimulus. So you've got Eurozone, and Eurozone growth accelerates a little bit. I just like the little Wall Street Journal here, and of course, Greece falls back in recessions because it's being managed so well by the current government. But the rest of the EU, after tightening their belts, seems to be growing a little better. Okay. For the most part, though, I think that's probably pretty good news. The question is how does that play out in the market? Well, we've got a VIX at 1330, so I think the big driver of volatility lately has been. There's our vol. I'm going to grab this out of here. Our big driver of volatility really has been the bond market. And let's take a look and see if that's really over yet. So if I get a little ticker here. All right, let's do 5 days. All right, really we had that big rally last week where they just crushed the volatility. Now you got May 11th, 12th, vol getting back down to that was like a 1270 low. That to me is probably about as low as we can go as long as okay, we still have the volatility we have in this market. Okay, so here's 5-day volatility for the Treasury. You know, it's right. This is May. This is very short term, obviously. Okay, so that's going to be, but we're still at like a 16% vol for June and July for Treasuries. Okay, all I can say is what the heck, right? What the heck? Meaning there is still plenty of volatility and uncertainty in fixed income markets, right? This will drive, I think, equity volatility until we start getting back down to like, that longer term vol gets down to 11 handle. So I expect to see a lot more gyrations in stocks as long as the market's going through this phase of the EU, Europe, us deciding when to, start the interest rate regime. Because for one of these, we got bonds at an all-time high. I mean, relatively speaking, stocks at an all-time high. Usually, the asset classes kind of move around in different directions. Normally, with stocks this expensive, bonds would be relatively expensive or relatively cheap, because rates would be a little higher. And we don't have that this time. So it is the long, slow unwind of the QE. And really, the financial crisis was 2008, 2009. It's now 2015. It's 6 years later, and they're still dealing with it. I mean, saying the unwind could still be, don't really know how that's going to shake out. And we get a rally this morning because retail sales aren't that great, and that's mean that rates aren't going to go down or rates aren't going to go up. Again, it's the good news, the bad news is good news scenario, and the market has not held those rallies very long anymore. But if we can get bonds to settle down to some degree, I think then volatility will continue to stay relatively in the low end for equities, because underlying economics aren't too bad, and that's the bottom line. So what we'll do is we have some trades that are reflective of that in our strategy letter for all those subscribers, and we'll be looking at now maybe some individual names that have a chance to move out a little bit farther while the market's kind of doing what it's doing, which I think is going to be gyrating around this all-time high number. But until there's a really good reason to go higher, it's just not going to make that jump. All right. So again, looking for more near the money trades. I think with the vol this low, I don't think iron condors are particularly good, but I don't think we're going a whole lot of anywhere. If anything, we just keep gyrating around until the fixed income market stabilizes, and that's what we got. All right, everybody. I will see you all in the chat room and in all of the different option pit venues that we have open during the day. All right, guys. Bye-bye.